All right, everybody, welcome back to Cashflow Chronicles. Another great day with Mr. Patel. We are officially into the second half of the year, July 1st, 2024. We'll get into the personal portfolio, but before we do that, make sure you guys hit the subscribe and like button. NVIDIA hanging out at 123, Bros $41. Apple still on a run, $216. SPY hanging out at 54.50. The Q's 480. Palantir hanging out at just below $26. Google almost made it to 190, but it's hanging back down at 182. Amazon 196. Bitcoin going a slight run over the past 2 days, back up close to 63,000. Oil $83, and natural gas kicking back down to $2.40. Mr. Patel, I did some looking at CNBC today. Tom Lee continues to be very bullish about the market, talking about how we potentially might get to 580 on the SPY before the end of the year. It's something to kind of talk about. And also, he's still extremely bullish on Bitcoin getting to about 150,000 before the end of the year. There's several other people out there talking about 575 on the SPY, 570 on the SPY. And they're not just talking about multiple expansion. They're talking about great earnings growth throughout the second half of the year, potentially software kicking up some great earnings throughout the last half of the year. So we could touch a little bit on that. Was there anything else that you wanted to bring into the room before we kick it off with the intro?
With all that positivity, I am shocked that today the 10-year was up. Did you see that?
I did see that.
That was a little bit surprising to me because I thought all the news was positive, but everything that I'm reading is telling me that it might be something political. So maybe after the intro, we can come right back.
Yeah, I've been doing a little looking at the UK politics as well, because their election is on the 4th. So this Thursday on our Independence Day. So curious to think what that might have as implications as well. But we'll talk about it right after this message.
Greed is good.
The stock is going to go up, down, sideways, or in fucking circles. It's all a fugazi.
Sell it all.
Greed is good. Huge upside potential, upwards of $60,000.
You know, it makes me happy when I can see Chris in the background giggling like a little schoolgirl to the intro, unless there's something else. Maybe you got a text message or something like that. But
no, I'm actually like really grown on that intro, except for like except for the humping sounds that you get like 2 seconds into it. You know, like the
that's from the song. From the song, you know.
I know. Other than that, it's actually pretty good.
Yeah. No, it's it was a clown thing that I did, and I kept it up. At some point we'll find somebody to give us a real intro. If somebody wants to make us a real intro, we'll gladly pay you. But all right. So curious where you want to start. There's a lot of different topics we can go down. We have people asking about CVS, Visa, stuff like that in the chat. I'm not necessarily going to jump into CVS, but I'm curious to hear what your thoughts with Tom Lee, 580 on the SPY and 150 on Bitcoin.
Do you have his clip loaded up by any chance? Maybe
I can grab it. Yeah, I can grab it really quick. Yeah.
Yeah. I mean, there isn't anything fundamentally wrong with the economy. I do see, however, that things are slowing down. The indicators that I'm looking at primarily, which is shelter right now, is starting to see some softening, especially with demand. Once I hear what's going on with Tom Lee, we can actually circle back and like look at some of the data points. Because I think at this point, the Fed should have everything they need to start cutting probably in September. I think July, they'll kind of just like allude to a September cut, in which case September is going to be ultimately the main one. So let's listen in.
Fundstrat Global Advisors, managing partner and CNBC contributor, but close enough.
Turn up the volume just a little bit.
For government work, you're right again. And once again, your rationale was borne out. It was that inflation would continue to cool. It's July 1st. You have a new target for the end of the year, or I've already sort of foreshadowed some of the things you were.
What's going on with my internet, man?
The S&P earnings might even be above what you thought.
Yes, I think that now that we're at the mid-year, 2025 earnings look a lot stronger than we thought at the start of the year. We thought maybe
Am I poor?
260. It's probably closer to 275, maybe 280, even 285. And I think the multiple we thought originally could be 20 times that number for next year. But given the Fed has more reasons to be dovish, and I think maybe the employment picture is softening, PE multiples actually could be higher next year. So I'd say between now and year end, stocks should be higher. I mean, we've had a strong first half already, and second half won't be as strong as the first half, but we should build upon those gains. So yeah, it looks pretty good.
You have numbers. I mean, so if the S&P is 285, you possibly, that's
Yeah.
earnings,
Correct.
285, up from 270. Because the economy doesn't cool, multiples don't.
What the heck is going on here? You're on mute.
I think you need to get a better.
I need Verizon, man. That's what I need.
Because the economy doesn't cool, multiples don't expand. In fact, they might contract from 21 to
lower
20.
the quality if you have to.
Multiply 20 times 285, you get to 5,800.
Yes. So that sounds like it would be within reasonable, as a reasonable base case, that stocks don't have to have a prodigious second half. They just have to follow what typically happens in the second half, especially in an election year.
So 5,800 for the year, what would that be the total return of it? It's 15 now, so
Yeah, so it's, it's a little bit more than 20%.
which would be after last year's
24.
24. That's
Yeah.
a couple of years no one really expected, I don't think.
That's
Yeah,
right.
you
I mean,
can stop
that's
that. You can
painful
stop
for people who've been sitting.
Yeah. I mean, Tom Lee's not wrong. But what he said was interesting. So if we've up 15% for the year so far, and they're looking at 20% total, that means there's like a 5% upside from here.
Yeah.
And I could see that happening, where the majority of the gains so far this year in the S&P have primarily been driven by the mega cap 8. We could see some softness on the mega cap 8 going into this year, and the rest of the market kind of like catching up a little bit, because I have been tracking a lot of companies, and the reason why they haven't necessarily done as well as the rest of the market, well, not the rest of the market, the other Mag 8 companies, is because a lot of them are loaded up with debt, So the key is that debt is probably holding them back, where these higher interest payments are impacting their bottom lines and earnings. And we're starting to see that kind of like that's going away. If rates start to come down, all of those are going to improve their margins, in which case then you'll see like a broadening out of this rally, where the other like laggards are going to start catching up. So yeah, it'll be interesting. I mean, and that's how we're kind of like positioning our portfolio in anticipation of the cuts. So I think we saw some weakness in the portfolio today. Do you have a portfolio? Do you have the portfolios loaded up?
Yeah, I have all that. Yeah. But I think the one thing that I also wanted to note as well is, generally speaking, let me just make sure I shared this slide first. Generally speaking, in an election year, returns are pretty positive in the second half of the year, generally, right? It's not to guarantee anything, but generally speaking, when you get a new election, I think a lot of times people think, volatility is going to be a big thing. So and so gets into the office, it's going to tank the market, and generally, you see positive returns throughout the second half of the year, and then you're also normally getting a Christmas rally, right? It's not to guarantee those things, but generally speaking, there'll be some sort of pullback, whether it's 5-10% within the next few months. And I'm sure we'll end up with a nice big 15-20% rally towards the end of the year, which gets you that 20% full for the year. So normally that's what ends up happening. But
Yeah, let's make this bigger so this way we can see. Let's see. So there we go. Yeah.
Sorry. Yes. So this is the portfolio. I have it just by alphabetical this time. I don't necessarily have it by current value. But you can see we did get paid our BPYPM and BPYPN dividends. So I put that $15-16 in the NEXT. We did actually drop 2% today. Majority of that led by Rocket Lab and the cruise lines, coupled with ABCL is kind of too small to really drag on the portfolio, but and then partly offset by TQQQ. Snow's been on a run, so we're glad we're gonna got that back at the bottom when we were at like 123. We'd sold in like the 130s and we bought back in the 123 range. So we're almost flat on the Snow position now. Him's just kind of hanging in there. But yeah, Carnival and then Norwegian have kind of pulled back slightly.
Yeah. I mean, some of it, in my opinion, was expected because like we had such a massive run in both of the names that I wasn't surprised to see a pullback, but I was surprised to see a pullback of this magnitude in such a short period of time. And I think it's primarily being driven by this giant spike in 10-year treasury yields. And I'm baffled by it, but I don't know. It's such a, and let me tell you guys what I mean. Hold on one second. Let me show you. So this right here is the 10-year treasury. So what happens is a lot of companies, their bonds primarily like for new issuances, they're benchmarked against certain, even even if they're fixed, they're benchmarked against certain other things. So the treasury is being risk free. Longer dated corporate bonds are typically benchmarks against this. So when you see like a giant rise in interest rates, like we saw like literally today, over the last few days, I guess that's bad for companies that have a lot of debt because that means that debt servicing costs might stay elevated for longer. I think right now everyone is expecting these cuts. Cuts may not be coming as soon as everyone is hoping, but I don't know. I'm like I said, I was perplexed by this sudden rise today. I tried to figure out like some decent explanations why, and the only explanation I got was around politics. You know, with Trump coming on and Biden kind of like taking a bit of a back seat in terms of like popular attitude, like the popular narrative that Biden might actually win. A lot of people are saying that Trump and his policies might reaccelerate inflation. And if Trump comes in, I mean, some of the policies that Trump had were pretty inflationary. The ones that I would say probably are like closing off the border and, mass deportations. I mean, when you think about it, all these people that work in the United States, even if they are illegal, they provide some form of labor, and usually it's low cost labor. And because of that low cost labor, it does take away from quote unquote American jobs, but it also creates an incentive for for basically employers not to have to pay a lot to employees. So you're effectively subsidizing some of the cost, and that cost can get passed on to the consumer. So if you go to like, let's say, certain parts of the country where they're heavily agriculturally dependent and they need a lot of manual labor, a lot of that labor comes from illegal immigration. So if we mass deport people, a lot of those farmers will have to hire people, but or go machinery or whatever, and it's going to cost them a lot more. So that ends up coming down to the food inflation category. And then you also have issues around Trump and his tariffs against China and the European Union. So goods coming from outside sources, if we become very protectionist, that means that now those goods prices are going to have to go up to compensate for that tariff increase. So a lot of people think tariffs just kind of hurt the other country, and it's like, no, it also eventually comes to us in the form of higher cost. Some people are willing to eat the cost, some people are not. So it just kind of depends on who you are and what you believe. But overall, the aggregate inflation that we've seen over the last few years have been the result of a lot of like overspending by the government, but it's also been policy related as well, where there are some policies that were enacted that are kind of like keeping inflation higher than usual. I will say this: I am a bit worried about the Trump tax cuts. If they get extended, that could be something that keeps inflation higher because it just means that people have more money. If those Trump tax cuts pretty much get lapsed and, like they end, that means that number one, people will end up paying more in taxes, which is good because we have a lot of deficit. But in terms of inflation, it's also going to help as well. Um, the question is, how is it going to impact Wall Street and the stock market? Will it slow things down to a degree that ends up seeing us end up in a recession? So I don't know. There's a lot of like unknown unknowns right now that are happening in the background.
Yeah.
All I can say is I try to follow the data, and as the data changes, I change the thesis. But right now, I'm a bit lost. I'm not gonna lie. I just don't know which way to go.
Do you think that the deficit would grow immediately under Trump with the tax cuts being continued? I guess it wouldn't grow massively, but I think there are some certain things that I think he would want to spend more money on. Maybe some areas he would want to spend less. So, I mean, do you think that with the cuts extending, that the deficit would continue to grow at on an unreasonable pace, or do you think there would be action to be able to get that under control? And if that's the case, do you think overall we'd stop printing as much money, which might end up leading to less inflation in the future?
Unfortunately, I think both both parties and their executive leaders have been pretty
Yeah.
much, been.
I think there's going to be a deficit either way, right?
Yeah, yeah.
So,
Oh, yeah. The problem, usually what happens is usually when you have like divided governments, those are like some of the best times because if you have like the presidency in the Republicans' hands and the Congress and the Democrats do everything to hobble the president. And it's the same thing with the Republican side, where if it's a Democrat president, you've got a Republican majority, they'll throw a bunch of monkey wrenches in there also. So that's what usually controls the level of spending so it's not egregious. Like, when President Trump passed the tax cuts in 2017, that was a boost to the economy, but it also meant that our deficits in the future would, would go up, right?
Mhm.
So these are the kinds of like things that we just have to keep in mind. And I don't know, like
It's a scale, right? Because it's on this one side it helps, on the other side it doesn't. I mean, I'm just trying to think. I mean, if we do an egregious cut like we did with businesses and everything was at a flat 21% or whatever, like it was back in 2017, that might allow some of these employers to focus on, not necessarily having to raise prices to make ends meet. Like we've seen, specifically like Dutch Bros and a lot of these other consumer brands, they're really struggling to keep up with, being able to pay their workers $20 an hour on the West Coast, right? I mean, that's something that's a large step change. And unfortunately, that just doesn't mean that there's going to be price raises only in the West Coast. It's going to feed throughout the rest of the organization so they can help offset those costs specifically for the West Coast. So it's like they're going to be breaking even, if not slightly losing money on the West Coast just by being able to help offset, the rest of the country. So my thinking is if you do allow them to actually cut taxes on some of these corporations, they might not necessarily have to be as aggressive with raising rates in the future. Raising prices in the future. Like I know plenty of things like I'm trying to remember. It's like stuff like Taco Bell and in all that stuff. It's like up 40% comparatively to where it was before the pandemic. And I'm going to get the numbers wrong, but it's up at a much faster pace than what you would anticipate based off of the inflation numbers that were being quoted, the 20-30% in the debate that we were kind of quoted last week. So I'm just kind of curious if that would help. But like you stated, at the end of the day, that means larger deficit. That means more printing. So it's, where's the bigger benefit, right? Is it, not having the food costs or like delivery costs going up as much as it was, or is it, printing a little bit of money? I don't necessarily know where the benefit point is there, but yeah.
Yeah, I mean, there's so much uncertainty in the market right now that I'm not sure. The only thing that we can do is find value in areas of the economy where there's just egregious levels of undervaluation, right? And then bet on those and hold on with your dear life. There are certain businesses out there that are completely immune to recessions, and they also have great operating metrics that will see them do well, and so I think positioning our portfolio towards that kind of thing, in if we do see a recession coming, might not be a bad idea. So here's a good example of something that's kind of like recession, I guess recession proof is the wrong word. Waste management, right? Garbage is not going anywhere. Everyone is always going to need some sort of garbage. Waste management is an $84 billion company right now. If you look at it historically, like, it's an up and to the right business. It's done exceptionally well. And there are tons of businesses like this where, especially if you go like 5 years, you didn't need a ton of excess return. So in 2011, this was $30 a share. Now it's about 20. Right. So what is that? A 7x roughly, So I think right now we have to find these businesses that are somewhat insulated against the general macro economy, and just invest in them and just chill. I mean, I'm creating a portfolio like specifically that has characteristics like that are like, yeah, they're not going anywhere. These are just businesses that have, pricing power. They're exponentially going to grow, even if it's at a high single digits amount, and then they combine that with like a buyback amount, they could end up doing really well. And I mean, there's also plays in the market right now with like certain companies that have been completely decimated that could be great for recovery just because like their business is doing okay. And maybe the market's not recognizing it, but it's going to be a while before we have to worry about that. So we'll see. Believe it or not, someone is bringing up Clean Harbors. I actually am looking at Clean Harbors. So
yeah, one of the other ones that I always kind of lean to when you're kind of uncertain about times is looking at railroads. Generally, one of the railroads is always going to be undervalued, whether that's Canadian Pacific or Union Pacific. One of them is always going to be undervalued. You have that opportunity to kind of just look at them. And speaking of, recession-proof businesses, yes, they sometimes fall out of favor. Their price to earnings can contract a little bit, but it's also going to benefit by a lot of the same things that we're talking about when it comes to cars, right? Autonomous, conductors and things like that really help squeak out some of those additional margins. Just focusing on the logistics side and having software in place now where you're getting a little bit better from a logistics side as well, shaving off some of that margin. So I think people still forget that a lot of the goods in this country are still transported by railroad, specifically when you think about how many goods come from the West Coast and have to make themselves all the way to the East Coast because they don't necessarily want to ship through the Panama Canal, So I think that's always going to be one. And I've never really seen a steady trend downward of earnings coming from the railroads. There might be a slight pullback one year, but it generally goes back up and to the right over time. So yeah, there's a good thought about that. But hey, I don't know how much do you even care about Bitcoin? Do you just not even want to cover the Bitcoin piece of Tom?
We can cover some Bitcoin. I mean, look, I'm personally not the biggest believer in Bitcoin. I'm more of a traditional, like, hey, if I can analyze the business, I can invest in it. Bitcoin to me has always seemed like it's like a hot potato.
Gamblers,
yeah. It's just who's gonna, and I think a lot of the speculation is why Bitcoin goes up and down. So it's very hard to figure out, like, okay, how do you value something that's not really a business? It's just, it's like, oh, the next guy will pay me more for it. That's what gives it its value. So
yeah. No, I hear you. I think there's a little bit more to it. I do believe that there's a little bit of I do believe that there's a greater view out there. And like I said, I have a very small position in this, so it's not like it's a huge part of my portfolio, but I'm a believer that it would go into above 100,000, maybe not by the end of the year, but in 2025. So I do believe that there's an opportunity for it to double from here, going into going into next year. But I'm a firm believer, just the devaluation of the dollar is a true worry for me. And, I see that happening all the time. And then coupling that with just the continued money printing, and also the ability to not have governments, kind of in your hair when you need to transfer money. And I do believe that that's a nice thing, because, man, when I deal with stuff like $2,000 used to be a lot to me. Now $2,000 versus worth of work is not a lot. So having that problem of, having to have the government's fingers involved in like bank transfers and stuff like that, it's so uncertain now versus when you have Bitcoin or just any other cheap cryptocurrency that you can immediately kind of like settle pretty much. You kind of know what you're paying in fees. You don't have some random fee that shows up. Like, for example, we just closed on this other Airbnb in May, and my sister bought some furniture or something like that. So I owe our partnership like $4,000. So I was like, okay, I have $2,000 handy. Let me add $2,000 to the bank account. I get the bank account information. Everything's all well and good. I was like, all right, it'll, instead of Venmoing her, I was like, I'll just have it go into, the account, $10 extra. Well, then out of nowhere, there's an additional, hey, just because you received a wire means that we're going to charge you $30. It's like, what the fuck? It's like, I can understand if I'm sending a wire, paying $10, $25, whatever I need to pay, but to receive a wire, I also have to pay a fee. So small things like that like, unless you read the fine print, you're never really going to know. And so what ended up happening is, we only walked away with $1,950 in the bank account rather than the $2,000, which I was like, well, that's a little bit of bullshit. So it makes you think a little bit about, do banks actually really have your true interest at heart? The answer is probably no, but it makes you think, like, when you move something through, say, Bitcoin, Ripple, whatever, you at least know the fees that you're paying day one, and you don't have to necessarily get caught up with it. Do I think it's a perfect system? Absolutely not. I think there's another opportunity out there, but I think for right now, it's probably one of the better systems that are out there, where it is, not necessarily reliant upon the government. So you could transport it, from here to Japan and not have to worry about, Swift being up your ass or anything like that. So for now, I think it's a good opportunity. I do think that there's going to be a day and age, though, that the technology gets replaced, and unfortunately, Bitcoin will probably end up being less worthwhile than it is today, unless somehow there's some sort of way that because it's the OG crypto, But as we've always seen, currencies come and go, right? And so, right now, the US dollar is the premier currency, but eventually, in say 200 years, 300 years, it might lose its, and it already has lost some of its prominence as the world's currency, because, not everyone's using it as the petrodollar anymore, and, all that sort of thing. So to me, I think it's just a slight hedge against the risk that the United States might collapse, and also just all currencies collapse, right? Every single currency has always collapsed throughout time. So maybe this one might be a little bit different. So I think it's worth, putting a little bit of a hedge, not a big hedge, but a little bit of a hedge into it. You're on mute.
I've been worried about this for I'd say probably last 6 months. I'm not sure if we are in the death spiral right now. It feels like that, where right now, neither party is willing to talk to each other. The government is super divided. You're seeing all sorts of issues happening. Maybe it's only happening at the front, but basically, the US has played its hand a little too much when it comes to the strength by using not just tariffs, but using sanctions, where it's like, oh, you know what? You don't do something we like, sanction. You don't like sanction. So it's like, okay, you know what? Fuck this. We don't need to use your dollar anymore. Fuck your dollar. We'll transact in other currency. So I think, I'm not saying that the dollar is losing its respect, but eventually people are going to come to the conclusion like that, hey, do I really want to keep my money with these guys, who basically are just spendthrifts that don't give a shit about, maintaining their fiscal stability. And I think the 10-year rise today was part of that, where there is a huge leadership vacuum. And I think like people are starting to question the stability of the United States, and like how much they can really look to the US for leadership, because we don't keep our promises to the countries we've made promises to. We basically fight each other all day, every day about every little thing. In terms of fiscal discipline, we're just completely not there anymore. The one good thing is that we do have an innovative and thriving economy, but how long can you live off of that? There's also a sense of moral decay that's happening in the country as well, that I think has basically alienated us from a lot of other countries, where our sense of morality has gone down so much that we don't even consider like the basic concepts of a family to be like a normal thing. So I don't know, like it just um I'm getting to the point right now where I have to at least consider diversifying my holdings outside of the United States. Like, for those that don't know, I have well, not me, but my dad has property in India and everything else. I am not trying to move to India and live the Indian life. I'm not doing that. But I would like to have assets that are non-US based. So in case that something were to happen long term, I have, and me and my family have something to look forward to. And I also think that this is going to sound really bad. I hate saying this, but it's the truth, so I'll say it. I think we've become too soft as a country. I think every time we've had a problem since the great financial crisis, we've just basically printed more money. And because we've printed more money, we've had this like sense of abundance that like, oh, everything is just going to be okay. Don't worry about it. Like, oh, the government's just going to come in and just take care of everything. And I think that's basically turned us into a society that's basically living off of yesterday's success, and instead of trying to do more with I don't know, maybe it's just me. I don't know.
I don't think so. I mean, unless there's a step change in, and actually that's why I wanted to bring up this. Unless there's a step change in how we actually treat debt within the United States, I don't think it's going to be around for much longer. Or some like, and I know that a lot of people are like, oh, well, so many countries are worse off. I get that, right? Like, I get that other countries are worse off, right? I mean, I know Argentina and many of these other countries in South America have massive inflation problems, worse than the United States. But, at some point, people are going to be done with the promises that the United States is kind of given. At some point, people are going to recognize that, China is an investable economy as well. At some point, they're going to realize India is a potentially investable economy as well. And dollars are going to go there rather than particularly going into the U.S. For now, it works in the United States, but and actually, I think the only breath of hope that I have seen from the U.S. fiscal policy is actually this total assets and them unwinding all these bonds that they've actually said we're almost down to 7 trillion compared to where we started the pandemic, which was at about 4 trillion. So, we've actually offloaded close to $2 trillion over the past, I guess, what is this, since mid 2022. But it has started to seem to flatten out a little bit. So I'm curious what's going on with that. But regardless, I am slightly surprised. I anticipated that we'd end up with something like this, right? Remember when all the regional banks needed short-term, liquidity, and then you saw something like this? I was anticipating this was going to be a normal event every single year for some reason or another, right? Kind of like what you said. Banks need capital. Let's give them a little bit of liquidity, and then you just have this consistent, shark fin always kind of going up. But I mean, if you think about where we've gotten to since the great financial crisis, going back to exactly what you said here, Chris, all of this literally, we were hanging out at about $910 billion, on the Fed balance sheet. And then we did TARP, and TARP was massive in the day. And that wasn't even $1 trillion. The tarnished asset, what was it? Replacement program? Is that what it was? TARP? But anyway,
No, temporary asset relief program.
that's what it was. Thank you. But I mean, that wasn't even $1 billion, and everyone freaked out about it. And then during COVID, we gave $3 trillion within the matter of a couple weeks. It's like it's interesting in that respect. Here's all the quantitative easing that was happening, and then we slowly, right before the pandemic, we slowly started. I remember the market freaked out towards the end of 2018. It was a great time to buy at the end of 2018 because the market pulled back in December by like 20%, and I was just buying. And then next thing you know, not everyone freaked. Actually, a great time to buy Boeing as well. I think Boeing was like $100 and something bucks. Next best time to buy Boeing obviously was during the midst of the pandemic. You'd be able to get it for $80, and I think I did. But yeah, I mean, look at all this. This is just an example of what Chris is talking about. Just the ability to print money, buy bonds to be able to strengthen the market,
support deficits, to keep supporting deficits.
So it's just interesting in that respect, and I agree with you. I feel like to an extent, and I don't know, Chris. I mean, I hear what you're saying, but I feel like, am I just the grumpy old man that I always saw in the movies that was always like, oh, back in my day, things were X, Y, and Z, and then things will actually move on. Things will actually be okay. I don't know.
I mean, the only conclusion that I can come to is buy physical assets, like buy land. Like land is land, like ownership is ownership. So if you look at like if inflation tomorrow or the dollar collapses, you still own all that land. Imagine being the largest landowner in Georgia. You're still going to be the largest landowner in Georgia, right? Whether inflation is not going to impact you because the value of your land will go up. As long as there's some level of production happening, there's economic interest that'll go up with it. So some people are like gold bugs. They're like, oh, I'm just going to buy a whole bunch of gold. I'm more like, maybe I want to take some money off the business end and instead put it into like hard assets, and maybe hard assets that are outside of the US, So these are the kinds of things that I would probably say, like long-term, like generational wealth kind of like preservation. Because I mean, in my lifetime, I don't see the US collapsing, by the way. Like, it's not going to happen. We just have too many things like that we're living off of right now that work really well. But if you're telling me like my next generation, what am I going to leave with them? What am I going to leave for them? It's probably going to be like some sort of like assets that they can, basically subsist off of for a long time. So yeah, it's just, for me, I've always found land to be like the biggest thing. Like that's the one thing. Like Bitcoin, I know a lot of people think, oh, Bitcoin, because it's, but I think Bitcoin is one of those things that can be heavily regulated and taken over and all this other stuff. Land is just one of those things that I think, like once you own a large part of it, it's nice. Like, have you ever considered buying like a huge plot of land?
To me, I've more so. What's a huge, by the way? What's huge, by the way? Like 20 acres?
I don't know. You tell me. Like,
I've definitely looked at 20. Just done somewhere one so that I could build my house and then a couple friends' houses if necessary. But to me, more of the goal is, around. I don't want to say nomad lifestyle, but it's more along the lines of having homes throughout the world that I could go and actually spend time at for a month or two. So if I wanted to go to Indonesia, I've never been, but eventually I plan on going there and checking it out. If I like it, potentially buying a home there, whether I rent it out on Airbnb, whatever, most likely. But if that's the case, then my hope is to have 5 or 6 homes scattered around the world where at any one time I could be and focus on whatever potential business I'm working on, or just be retired, one of the two. But, my hope is that I'd be working on some sort of business. One here in Houston, I would say, one back home, in the Philadelphia, New Jersey area. One, I don't know where else, but somewhere definitely in Asia, Southeast Asia, likely. But, that's kind of the thought that I've always had, not necessarily let's just say a massive amounts. I've never aspired to be the largest landowner in Pennsylvania or Georgia or anything like, because I know it's impossible at this point, right? I mean, unless I hit it big with a stock, or create a business that allows me to have billions of dollars, it's kind of off the table. But I could have something that is sufficient enough to have me and a couple families, living with me, extended family or whatever. Anyway.
I mean, what's funny is my wife. I didn't know this about her before we were together, but she's a really big doomsday prepper. I had no idea. It's like one day she just kind of orders all this shit from Amazon, and I'm like, what is all of this? She's like, oh, this is like food that'll like last us into the future. I was like, what? It's like, yeah, like I bought like this go bag. I was like, oh man, that's interesting. So then like she kind of told me, she's like, yeah, like, I want to buy a bunker. I was like, what? Like, you want to buy a doomsday bunker? Like, I was like, what is going on here? It's just really funny. It's just,
is that when you guys are looking at houses, is that she's like making sure the backyard is sufficient so they have the steps down?
Yeah. Well, I mean, we were looking at like this one, like this couple, what they did was there was this mountain and they had dug out like this giant cave portion of it, right? And then they kind of just had like a house built into the side of the mountain, right? And it was very secluded. So it was really nice. Like I was looking at it, I think they turned it into an Airbnb, but the point is I had no idea she wanted to be like a doomsday prepper, and turns out
they know.
Yeah, maybe one day. I can't tell you where. Well, I'm not gonna say right now because otherwise, will show up at my bunker.
Yeah, next thing you know, like something happens and everyone's gonna be like, "Please, Chris,
let me in.
Let me in." I know you have Hostess and whatever other things that are.
But overall, in terms of like economy, I shouldn't be sad, but I'm sad. I don't know. Have you been feeling that by any chance?
Sad, no. I have been wondering when the music is going to stop.
Yeah.
And part of me wonders if I'm overexposed. Like, part of me wonders because 2022 is not a good feeling, right? I mean, I'll just be blunt. I mean, at that point, I was down almost a house, like the almost the equivalent of the house that I'm living in right now. I was down in the stock market in 2022, and so looking at it, waking it up, seeing that big red number that's 6 digits long is scary. Especially when you're 31 years old, you're like, is this it? And you just have to say, I'm sticking to my convictions. I'm going to continue to invest. But seeing that is scary. And I know that I'm up about 50% overall compared to where I was back then.
Yeah.
So it's like, I know it would even be a bigger number. And I know, the more I invest, it's going to be even a bigger number every time you do have some sort of pullback like that. So it's just scary. So I hear you. It's kind of like, do you have the discipline?
I'm not going to show the number, but this is what my portfolio looked like.
Yeah.
So I literally started Robinhood towards the end of 2021, but look at that whole thing, man.
Yeah.
So to see that kind of a drawdown, it's bad. It's like really bad. I mean, I knew I was going to be fine, but it's never good to see like, you never want to see your portfolio drop by that much. And it's really hard because like you have to, especially if you've worked your ass off to build that portfolio, you're like, oh man, I could have done this with that money. I could have done that with that money. I could have, it's just so many things that go through your head. And the thing is, like, at the time, you just have to remind yourself, like, hey, everything's going to be okay. Like, money is just money. Tomorrow, it'll come, it'll go. The one thing I do regret is probably not taking advantage of the low rate environment and buying a house. But then again, like I had my condo and stuff, and I had my condo in New York, so we would have like really stretched ourselves thin trying to buy a house during that time. So my hope was that, you know, like once I sold my apartment in New York, I'll have that additional cash to buy. And the thing is, I saw interest rates going up. I was like, oh yeah, and home prices should go down. Interest rates go up, home prices come down. It's easy, simple. And it didn't exactly happen that way, you know. And the money printer just kept on printing. The housing prices kept on going up. No one really wanted to sell their homes because everyone was locked into like really low rates. Like I was at a friend's house maybe like 2 weeks ago. It's a really nice home, beautiful home, right? And I'm like, man, how does this guy afford to live here? But then, you know, he's like, yeah, my monthly mortgage is like $2,200. And it's like, how the hell is like $2,200? Like, that doesn't make sense. But it's like, yeah, you got a 2.75% mortgage during that period of craziness. Right now, that same house is worth probably $300,000-$400,000 more than he bought it for, and you would have to pay almost a 7% interest rate. So anyone new coming in, they're going to be paying close to like $4,000 or $5,000 a month. Yeah. So it's one of those things where I think a lot of people who bought houses during that time or were able to refinance at lower rates. I mean, dude, my condo right now, we barely pay $500 a month in mortgage. So I can't even say like I'm not benefiting. It's just I wish I had bought a bigger home at the time.
Yeah,
you know. So
no, I know a lot of people that don't invest in the market. They pretty much invest strictly in their homes, and you know they make them nice as they can, and then they end up taking all that equity, moving into the next home. And so I understand, like they might have these beautiful $700,000, $800,000 homes, but the mortgage actually isn't that much because they, one, had favorable interest rates, and then two, they kept carrying the equity. And so I get it, right? To me, you know, I would love to take advantage of in the next 2 years, if it's possible, getting a more forever home. And I'm way ahead on the mortgage. I've only lived here since October. Late October is when I moved in. I'm already ahead about 2.5 years on the mortgage. Just by putting an extra, like I'm talking, it's so simple. Like you just throw an extra $250, that's a month's mortgage because you're not paying the extra interest on it. So it's literally like if you have an extra $250, you just throw it in there. Next thing you know, so it's like to me, the hope is I get ahead enough that when I finally do refinance, I'll probably extend it out the additional 30 years, which I'm fine with because it's going to be a rental, right? It's not going to be, you know, so to get the monthly payment down as much as I can. So when I put someone in here, it actually cash flows. Because I think right now, without rents have been in Houston, they're just dropping like a rock. I think it'd be very difficult to break even right now. But yeah, I would love to purchase a fourth place, and that would be probably where I would stay for a little bit until I actually get way more equity. I would love to be closer to like a 60% loan to value ratio with all my properties. Maybe I'd be okay, you know, with my personal property, paying it off a little bit more. But for my actual rentals, I would love to be closer to a 60%, just in case, you know, I do need to wholesale them, you know, and I have that, you know, 40% drawdown in the market to be able to say, well, you know, I'm not paying to get out of this thing, right? Like I can get out of it. I can get out of the mortgage. I don't have to worry about it. And if I need to, and I find a really good deal, I have the opportunity to refinance one of them or do a HELOC and pull it out and purchase another property. And if you have 3 properties that are at a 60% loan to value, you know, you're not going to be really in too much trouble, right? You have equity in the other 2 homes that can help offset it. So the hope is right now I'm way stretched in terms of like where I would want to be. So hopefully within the next 2 to 3 years, I can get better in terms of loan to value ratio in all 3 or 4 of them. 3 of them, and then eventually get the 4th property and really hone in on getting started maybe on some of the construction stuff that I want to do.
So let's answer some of the questions. So someone said, Chris, do you like Celsius? Do you have any idea why shares sold off from the highs? We sold our positions in the 90s, like both I kind of alerted the Patreon members that I had, and me and Maddie, we sold in the 90s as well. The reason why it got sold off is because growth is slowing down significantly for them, right? So
Really
last
bad.
year,
Like not a little bit, like really bad.
yeah. So it really was like maybe a lot of this is just inventory catching up with demand, or it's actual demand falling off like a rock. But basically, I wouldn't say Celsius is uninvestable. I would just say right now the expectations for a lot of growth should be tempered with Celsius. So, it just made a lot of sense. My price target was $100 by 2026. It got there in 3-4 months. We made some good money on it. We sold it off. I'm not getting back in until I see improvement in terms of their margins. Not margins, in terms of their what is that thing called? In terms of their growth again. And at the same time, I also kind of want to see that they are gaining market share again. Because right now, from what I saw, they're actually starting to lose market share. Some of the other new entrants that are coming into the market that compete with them directly are gaining some market share. So it's not always the greatest thing in the world. So,
Yeah, and I think didn't Pepsi mention it on one of their calls or investor updates too, or something like that they're actually starting to see. So it wasn't just like hearsay from Celsius. But I will state, was it today? I actually did sell 3, so it's not a big position, but I sold 3 August $50 puts. I think it was was it $2 or $3 a piece?
For what stock?
For a Celsius.
Okay.
So I think it might be early, but if it is, I don't think it'll travel much below $40. But I do think that you're right. I think to me, I think it's a little bit early. I think I would want to wait optimally before 2Q, before initiate the 2Q results to know how bad it is and how the stock reacts after that 2Q news. And it could very well be that it's overreacted and the stock pops. But I think that's okay as well, because you're not going to lose money after that point. But, I think I've taken a pretty small position. And if it does actually take a big pullback into the 40s, I'll reevaluate. But I don't think it's going to crash down to the $20, $30 range. I just don't see it.
Yeah, I don't see that either. Thoughts on Snow and Analyst upgrades? Hey, I'm glad to see upgrades, man. I still am holding my Snowflake position. We haven't sold our position yet. But once it gets to a certain point, it's not a bad idea to trim a little bit and just hold off. Because, the sector is slowly starting to get revitalized. Like MongoDB was up, software is up. So I'm thinking that maybe like the worst is over for these guys, but we'll see what happens. I'm like I said, I have to be data dependent. And right now, like the biggest challenge for Snowflake, in my opinion, is just this transition to a newer table format that, may or may not impact them in the future. So we'll see.
It was
Any
just
thoughts
oversold.
on?
It was just oversold.
Yeah. Any thoughts on Palantir price? I hate Palantir, dude. I fucking hate Palantir.
I think it's appropriately valued at $25. To me, $25 is not too overextended in valuation. It's not too undervalued. I think it's appropriately valued for where I think the stock is going to go. I think between now and the end of the year, depending on what kind of news you get, it might pop up to 30. But until I see a massive step change in their revenue growth, hopefully going back into the 30 range, 30% annual growth, I think $25 is appropriate for them right now. I'd actually like to see them, because they're on pace for $850 to $1 billion in cash flow this year. I would like to see some more buybacks, because they're not doing anything else with the capital, right? If they were doing something useful, like reinvesting it and getting a great return on capital invested, I would be like, don't do buybacks. But right now they're just adding and adding and adding to the balance sheet, to the point where by the end of the year, they're going to be close to $5 billion in cash just sitting there, which isn't a bad thing per se, but eventually you got to do something with it. So that's what my thoughts are with Palantir.
Palantir's overvalued, whatever. I don't. Did you talk about Hershey's today? No, we're still waiting on cocoa prices to come down significantly. They have been coming down, so I expect that earnings will be better than what a lot of people are
Weren't
expecting.
they like screaming down, but then they reversed for a little bit? What ended up happening with that?
No, it did. They came back down again. It's just the stock price hasn't moved up since the retreat of cocoa the second time. It's a volatile commodity, and so the business is kind of like in that zone, and there hasn't been a lot of clarity on how they'll deal with the higher pricing compared to the past. So like that's like one of the
Look at
things
that.
yeah, if you go to that plus icon right there, click on the plus icon next to the wrench,
Why am I going crazy?
right,
This guy?
up, left, left.
Yeah.
There,
Sorry.
and just put Hershey's there. There you go. Click on that. Okay. So you see, and do like a 1-year chart.
Yeah, it's
Actually,
1 year.
that's good. The problem is our faces are next to the thing. So blow it up. Make this whole thing bigger. There you go. So you guys see that there is an inverse relationship between cocoa prices and Hershey stock. As cocoa prices moved higher, Hershey stock kind of moved down. And then lately, they've kind of been like moving in sync, which should not be happening, which the price of cocoa has come down, but the value of Hershey stock has also gone
Fell
down.
down, yeah.
So it's one of those things that like the trend is it's just not going right, which doesn't make sense. But then I think I know why. One, the rate at which cocoa is dropping is not as profound, and the chances are that Hershey's might have to buy, at least for 2025, cocoa prices at elevated prices, which is going to impact their cost of goods, which means their earnings might be a little bit weaker. And if that's the thing is, like, they don't exactly release how much money that they have in terms of like hedging. So if you don't have the hedging details, you don't know how it's going to impact their earnings. And the thing is, like, the price of cacao is an issue right now. So I don't know. Like I said, I'm not HSY substitute cocoa for palm oil and no one cared. Yeah, pretty much. That's like, I think the cost of goods right now for cocoa is only about 16% of cost of goods. So I don't know. We'll see.
Yeah.
Like I said, I think I'm a little bit burnt out in talking about stocks.
No, man, you've covered a lot, right?
I need some vacation, man. I really just need to go and like spend like a week or two just away from the markets,
Yeah, no, you've covered a good bit, and I saw somebody asking about a good entry for Amazon. I mean, if you're asking me, I'm thinking Amazon 10 years down the road. So I'm saying buy as much as you can now. You'll probably be down at 20-30% at some point. I'm not a timer for Amazon, right? I have a $70,000 position in Amazon right now. I think in 10 years time, it'll be worth over $200,000. So that's why I bought Amazon. I bought it in late 2022 and throughout 2023 because I had a feeling that eventually it would climb to new heights, and it has. So, I have a fairly ambitious target on Amazon, but I'm not one to follow if you want to make money today, right? I'm a guy that if you want to make money in 10 years time, that's probably better set. I'm more of a long-term focused investor personally.
Yeah. No, I mean, I like you're on my Patreon, so like I've been advocating for Amazon for like the last year, man. Like we've covered this. Hold on one second. Let me just see. I actually made a really good amount of money on Amazon via spreads that I had like a while ago. So we covered this pretty extensively throughout last year and even some part of this year. Let me see. Amazon. We have Palo Alto, Amazon right here, about how Amazon is like one of the hidden jewels of
and they're killing it. Like, if you listen to the Amazon's calls, they're like, we're getting into healthcare AI. We're getting into, and I'm like, Jesus Christ, like, what aren't these guys getting into? There's some of the best voice products that are out on the market They're in the cameras that you use to secure your homes. Like what isn't Amazon doing?
Yeah. So this is like one of the things that I called out at the time. I was like, oh, the Amazon spreads for 2026 between 200 and 250. They were at about $10. I think they're about 20 something right now. You know, same thing with Apple. I think all these people had sold off Apple in February, and since then Apple has just absolutely gone gangbusters, man. So, you know, when you have like really good due diligence backing your thesis, you end up doing really well. Like even when we had Celsius, there was a really good thesis behind Celsius that made it a compelling investment. You know?
This is the reason why I love Amazon so much. So it pulled back so abruptly in 2021, 2022, because everyone saw that, okay, this is for everyone to get their eyes into this. E-commerce as a share of total US retail, right? Over basically the last 15 years. So, you know, Amazon obviously not a big proponent back in 2010, but if you think about how many sales are done with Amazon now, it's mind-boggling. So I think everyone knew that Amazon was spending like a crazy person in 2020 to keep up with demand, jumping pretty much 4% overnight from 11.4% in the first quarter to the second quarter of 2020, when everyone started doing work from home and being able to ship directly to their house, food packages directly to their house, food delivery to their house, etc. It went to 15.5%. And then it slowly kind of came down. Well, after the second wave, it started kind of pumping back up again, but then it reverted back to the mean, right? This didn't change. It's a trend that's happened over. And so to me, when I look at Amazon, yes, there's the AWS of things, and that's massively profitable. But to me, where I truly value the long-term benefit of Amazon that I think a lot of people aren't giving credit to is right now, Amazon, I think, is intentionally running their e-commerce business. And actually right now it's actually printing cash. It's not printing so much in the international space, but in the US space, it's printing a shit ton of cash. If you were to ask me where I think Amazon's e-commerce business would be in, say, 20 years time, I would say $1.5 trillion, you know, $2 trillion worth of just e-commerce strictly from you know, US retail sales. And I don't know if I lost Chris. Oh, no, Chris is back. Did I lose you guys? Did you hear me that whole time?
No, you're good. You're good.
Okay, very good. Anyway,
dude,
I'm bullish on Amazon.
Super Micro is about to fucking go gangbusters. Look at this. This is literally, sometimes this is all the investment thesis you need. You see this right here? This is Elon Musk and the CEO of SMCI. You know, and all he did was just post, thanks Elon Musk for leading the liquid cooling technology in large data centers. Now SMCI is going to go up fucking, let's see, SMCI. It's actually down. Okay. All right. Well, maybe we need to buy some call options on SMCI, bro, just in case you
Maybe.
get the Elon pump. Dude, the Elon pump, that's what leads everything, you know. We'll see what
it's
happens.
been actually, believe it or not, I'm surprised, since March it's been flat. Well, not flat, but you know what I mean, comparatively to what it was.
It's a low margin hardware business, man. We need to all
fucking Chris always exits himself out. But yeah, I'm trying to think. I need to talk to her. Yeah. Let's see. What other good questions? We might call it there, unless Mr. Patel's got anything else.
myself off. Man, you know, I really need a break. I need to go on like a vacation. Just like I need to rediscover myself. You know, I need to do the white girl thing. You know what the white girl thing is? The eat, pray, love thing, I think with Julia Roberts, where she just like went to India and like rode elephant for like a month, and like somehow that was like spiritual. I think like one of those like spiritual experiences, you know.
I think that's going to be me this weekend. So I'm flying in to Philly to go visit my mom / we have a cabin out in the middle of Pennsylvania. It's like 40 acres and there's a pool, hot tub, and you know my mom lives there now. So pretty much going to visit her, but I'm meeting up with all my high school buddies, and I'm just going to black out and do a hard reset You know, like whenever
Okay.
whenever you get enough drinks in you, some cigars, stuff like that, I consider that like a hard reset. You like forget about all the other stuff in the world. You know, I'm not bringing my work laptop, all that. It'll be good to just get some drinks in me and get a good hard reset in. That's generally what I do.
I might be having a midlife crisis. You know, so I'm almost 40, so like now I'm getting to that point where it's like, what is the purpose of life, right? And it's like, yeah, money, but then like if you don't have like anything else to do with it and go spend it on things, it's like, oh, I don't know. Maybe I need to figure out how to get I don't know why this keeps happening. It's so weird.
What, your monitor's freezing? Is that what it is?
Yeah.
This stream is just is cursed between my internet and yeah.
Yeah, I definitely need to just I just definitely need a vacation, man. Just get the hell away from like things for a little bit. So I'm gonna be in New York for a week. So I'm just gonna use that as a hard reset myself. We'll see where things go.
I think it's June's birthday. Hello, June. Happy birthday.
Yeah, happy birthday.
Awesome. Well, I appreciate you stopping by as always. You're the man. The show would be nothing without you. So trying to think, Thursday is still good. You want to take the night off and we'll meet back next week or what?
Yeah, if there's if there's any good news, then yeah, we'll meet up on.
Yeah,
on
I'm just gonna be
Thursday.
loafing around in a hotel room Thursday, and then the real party begins on Friday. So,
Okay.
yeah.
All right,
we'll
dude.
see. You're the man.
See ya.
Thank you all. We'll talk to you guys soon.